Hi,
Alrighty,
everyone.
everyone. Oh,
Oh, go ahead. Go ahead, Travis.
well, welcome everyone, and good afternoon. This is the Steps to Home Ownership. It is presented by myself, Travis Bain, with the SF LGBT Center, and Susanna Hart with Guild Mortgage. And we have some lovely folks from Homeownership SF that is helping run the workshop today. So let's go ahead and get to our next slide, but just a reminder, we are going to be recording the workshop today, and it's going to be posted to Homeownership SF's YouTube page, so that if you ever wanted to review the information or share it with someone else, you can go to their YouTube page and you're able to see this presentation again. So who is Homeownership SF? Homeownership SF is basically a community-based organization that the Center, Balance, Meta, and SFHDC and Asian Inc. are all a part of, and they are housing counseling agencies that work with the city's first-time homebuyer programs, and they also offer a lot of other support services as well. Next slide, please. So myself at the center, we primarily offer housing services related to homebuyer education, application assistance, and then debt and credit counseling. We also offer arts and cultures, community programs, employment services, information and resources, small business services, volunteering opportunities, and youth services for those aged 16 to 24. So let's move forward and talk about the 3 steps of buying a home. So for a quick overview, basically you are going to start working with your housing counselor. From there, you're going to get a pre-approval from a approved lender, and then you're going to work with a real estate agent to help locate your property. So this is kind of the order that you would be adding those folks to your team. Now, it's important to note that when it comes to the lender and your real estate agent, it's not going to be something where you just choose one right off the bat and you work with them throughout the entire process. That is something where you are strongly suggested to basically test the waters, check around, see if there's a couple of different lenders and a couple of different real estate agents to make sure that you find one that fits your needs the best. So let's go ahead and in the chat, why don't you give me either a question that you might want to ask a loan officer or a real estate agent. So just again in the chat, we're just seeing what would be a question that if you were getting a lender or a real estate agent, what would be something that you would want to ask them about if you were trying to add them on your team. So oftentimes some things like, if you're a loan officer, what is the turnaround process to get a pre-approval? Are there any additional down payment assistance options that you may have for me? And then for a real estate agent, just seeing how many years of experience that they have, if they're just one person working alone or if they are working with a team. Those are some great things that you can ask. Someone in the chat was mentioning, what are the fees if there are any to get the pre-approval? Definitely a great question. And for your housing counselor, you would find them through Homeownership SF. So it all kind of depends on who you take your trainings with and your workshops. So I'm going to ask those that are helping us out, if you're seeing that your screen is on or if you need to be muted, please go ahead and check that. I understand we have some background noise happening. But let's move forward with the next slide. And again, If you have your camera on or if you're unmuted right now, please go ahead and turn your camera off. And please make sure you are muting yourself. And Homeownership SF, if you could help us out with that, that would be appreciated. We're still getting some of that feedback. Thank you. All righty, so step one is getting prepared. So you're going to definitely want to make sure that you are setting long-term financial goals. So how does owning a home fit into the picture with your other goals, such as if you were thinking about retirement or going on vacations, checking your credit. Do you need to improve your credit score? Saving? Do you have any funds for a down payment, as well as closing costs? And then also identifying your housing priorities. So it's very important to note that credit building can take a lot of time. It is suggested that you work with your counselor and you check your credit around 6 to 12 months before you're actually prepared to purchase a home. That way you can start working on building your credit if you still need to. There are many expenses with buying a home. Of course, you'll need to have at least a minimum down payment, but the more down payment that you're able to put down for a home, the better your interest rate is going to be. Especially important nowadays, as we've seen the interest rates get hiked twice already, and there's talk about increasing them more. So definitely, maybe if you had a little bit more money for your down payment, you could get better lending terms and save yourself some money in the long run. And it is something where your housing counselor should be able to help you out with determining how much money that you might need. Now, for other priorities, real estate really is, especially in San Francisco, a series of trade-offs. So it's important for you to think about what are your top 5 priorities. So thinking about your day-to-day basis and through, is this a housing priority? So it's important for you to make a list of everything you want in your new home and then categorize them as what are going to be the needs for your new home. You're absolutely like, I need to be in this neighborhood. I need to have a window that's facing east because that wakes me up in the morning. And then also talking about like wants. So maybe it's something where you want a backyard or you'd want to have, a lot of trees and plants. So it really all depends on your unique circumstances. So let's move forward and talk about your household budget. So it's very important for you to review your budget. This is something that you're going to do with your housing counselor during your one-on-one. How much can you spend on housing expenses and for your down payment? And it's important to note that your pre-approval is the maximum loan amount, but only you can decide on how much you can afford. So the amount that your lender says that you qualify for may be different from what you actually want to spend on your housing, especially depending on your personal expenses and your lifestyle. So your personal household budget is what you want to be concerned with most, because the lender isn't going to be the one that's actually paying your mortgage for you. So it's important for you to go ahead and start tracking your monthly expenses now if you aren't already doing so. And it is something where the bank is looking at suggested ratios based off of national averages. So you may have other expenses associated with your life, such as childcare is a huge one, education costs another huge one. And so you might not have expenses that other people, such as gas or tolls or for commuting. It really all just depends on what sort of lifestyle you want to have with potential home ownership. It's very important for you to just make sure that you are aware of this, because you are the one that is committing to make that mortgage payment every month. So if there is a gap between your new payment and your current rent, it's important for you to go ahead and just start practicing like you're already in that housing situation. So if your current rent is $1,000, but if you were to own a home, it would be $2,000. See how stashing away that money feels for you with your other expenses. So let's move forward and review, am I prepared? So it's important for you to understand if you've met with a housing counselor and attended the first-time homebuyer workshops, then that's good. You should then make sure that you have money saved for down payment, reserves, and closing costs. And then you should also make sure that your credit is within lender guidelines, because every lender is going to be slightly different with their underwriting guidelines. So if you know all these things are true, then you are prepared to purchase a home and you can move forward with next steps. So to talk about next steps, we're going to be bringing up Susanna Hart from Guild Mortgage, and she's going to be discussing step 2.
Fantastic. Thank you, Travis. My name is Susanna Hart. I'm a senior loan officer with Guild Mortgage, and we'll get started here on the next step, which is getting pre-approved. So it's very important to know how much you can afford before you start looking for a house. This really helps avoid any heartbreak that you see a bunch of homes that you really can't afford, that you're looking in the right area for your budget. A lot of folks do get into trouble because they push their budget to get a house they wanted, but maybe they really couldn't afford. When you're discussing your pre-approval with your lender, understand that this is the standard for the areas that most realtors won't let you go and look at a home unless you've been pre-approved. You need to move and get this taken care of once you've gone through the counseling part with your homeownership counselor, set that budget, figured out how much you really want to be able to afford monthly, given that try of working on saving the difference of between the rent and your new mortgage home payment. That's a really great suggestion that I've seen. So a pre-qualification is not sufficient just to make an offer. What you really need to do is get fully pre-approved. And by that, what that means is the lender has taken a look at more than just your credit. We're looking at your income, we're looking at your documentation, and we're asking the deeper questions of what's going on with your financial profile over the past couple of years. And we're looking for those spots that could be dangerous areas in the financial profile, asking the questions that need to be answered before you go out looking. You don't want to get into a contract and then find out that you've been pre-qualified based on having 2 jobs, but you don't have the 2-year history, for example. Make sure that your lender is approved for any down payment assistance programs that you need to use. If you do want to take advantage of several of the programs that are out there, both with the San Francisco Mayor's Office of Housing, as well as any of the state and bond programs that are there, ask the question of the loan agent that you're working with, because not everybody does work with the programs, let alone be approved and on the list for various cities. Again, then you want to review the estimated total principal, interest, taxes, and insurance, and if there's HOA for your payment. Because again, what's on paper may not necessarily fit your budget, and you want to make sure that you're going back and looking at it to make sure that you can afford this particular payment. You also want to be able to avoid any sticker shock and see how it really feels when you're spending more by paying your rent and that little bit of extra that may be above your rent when you're looking to adjust to that new payment. As we'll go to the next slide. So it's very important to make sure that you keep your records of your income and your assets together. I usually suggest if you are very tech savvy, make sure you've got a secure folder on your desktop, locked with a password, that you put in your 2 to 3 years of federal income taxes that you filed, 3 months of your most recent bank statements with all pages. I know it's real easy today with the systems that everybody has to just say, well, here's my bank account on my phone. All banks do have statements. You need to find them and pull the most recent down. You also want to have at least 3 months consecutive of your pay stubs. Because what we do look for are consistency through those pay stubs. And you want to document any other source of income, second jobs, alimony, child support, things of those natures. So if you do have alimony or child support, we do need a copy of the court-ordered decrees for either one of those. Then, if you're also going to be getting gift funds, talk to your loan agent. Very, very important. Each lender has their own gift letter that you'll use, and the process for documenting the ability to give funds, the transfer of the funds, and the receipt of the funds. So please make sure that you talk directly to your lender to go over each and every one of those. Explanation letters for any large deposits on your bank statements or gaps of employment. Very important that you keep that open communication with your lender so that they can properly tell your story to an underwriter and properly put together your financial profile as it is, and any kind of gaps or bumps or maybe windfalls of a large deposit that you have received. It's really important keeping that open communication together. We'll go to the next slide. So one of the things that I know you'll already be talking to your financial counselor at the nonprofit is your credit. So good credit. Most mortgage lenders will use the FICO mid score. That is the middle of the 3 bureaus that do report. Other types of credit score models do exist, but basically in the lending industry, we are going to use the middle score of the FICO. Review your credit for errors. If you haven't had a soft pull with your counselor, definitely do one on your own. Make sure that some of the errors that are on there have been addressed. Look for addresses you don't recognize, name variations you don't recognize, look for social security variations, and these are all very important to make sure that you keep your credit in good standing. Also, one of the best ways, and one of the ways I see a lot lately, and I really like it, is the Boost Your Score report. Any of your usual bills such as cell phones, garbage, water, PG&E, if you make any of those payments, your rent payment, have them reported on your credit report. It will help boost your score. Now, the required down payment and your mortgage interest rate may depend on your credit score. As a matter of fact, a lot of the down payment assistance programs have a minimum FICO requirement, and a lot of pricing for your mortgage rate is what we call risk-based pricing. What that means, the higher the risk, you might see a slightly higher interest rate. So here you can kind of see a great chart, the FICO mid scores that we do see. Okay credit is between 620 to 679. Good credit, 680 to 719. Excellent, 720 all the way up to the top. Pretty much anything over 720, it's just gravy, and it's wonderful to see. So definitely work with your counselor to boost that if you have any issues. This will go to the next slide. So how much down are you going to be needing or expecting? So this does depend on several factors. How much are you borrowing? So there are limits to really high sales prices. Some of them will require you put down 5%, and some will require you up to 15 and 20%, depending on how big of a mortgage do you need and sales price that you're looking in. And also, again, remember I talked about risk-based pricing for your mortgage rate. Your credit score is going to impact that, so keep that in mind. So if you need more money down to keep the loan in a good position where your ratios are good and everything makes sense, your credit score does play a huge part in that. And then also, what kind of loan do you want? If you want conventional, there are some conventionals as minimum down is 3%. If you go FHA, that's 3.5%. VA is 0% down. But again, that's something to discuss with your loan agent and really depends on your total profile of your mortgage, your financial profile. So I guess we'll go to the next slide. So what are some of the fees on top of your down payment that you would expect to pay? There are some fees that you're going to pay that are part of closing costs. So not only do you have to have your down payment, but you also need to have closing costs. So paid by the buyer, typically in the state of California, is the title insurance, the loan fees, your escrow fees, any inspections that you may want to have of the home, and your recording and transfer fees. And typically paid by the seller are your realtor commissions. So that realtor that you've hired gets actually paid by the seller once the loan closes. They also tend to pay a lot of city and county transfer tax, settlement charges, loan payoff fees, and liens against the property. So you're not required to pay anything. Obviously, if the seller owes something, you're not going to take a part in that. So in Oakland, for example, the buyer will pay the city transfer tax, and closing costs are in addition to your down payment requirements. In San Francisco, the seller only customarily pays transfer over a certain price point, which is $650,000. Customs aside, everything is negotiable. So you do want to talk with your realtor, and you may choose to ask for some closing costs paid by the seller in order to help you in and lower your out-of-pocket expenses. So remember to lean on your team. It's really important because we'll know, both the realtor and the lender will know what's customary for your area in terms of your fees. So I guess we'll go to the next slide. So there's something known as cash reserves. We talked a little bit about down payment, conventional needing 3%, FHA 3.5%, and we've talked about closing costs. Well, there's also something known as reserves. Typically, a lender likes to see 2 to 3 months of your housing payment in reserves. Why do they like to see this? Well, you're making a change in your housing expense, and in a lot of cases, it's going to go up. So what the lender likes to see is you have 2 to 3 months of that housing expense just in case you have an emergency or something comes up and you need to be able to fix something, do something, and then also be able to make your household expenses. So it's really important. Talk to your housing counselor. They will suggest how you retain additional funds, and as a homeowner, maintain a minimum of 3 to 6 months. It's really important, even after you close. This is something to just have in case you need it. So we'll go to the next slide. So now the lender has looked at your credit, we've looked at your employment, we've looked at how much money down. We kind of have an idea of the different programs that are out there. We'll issue a pre-approval letter. Typically, the pre-approval letter is good for up to 3 months. Any changes to your financial situation could impact your pre-approval letter. So again, keep in touch with your lender. Your lender will probably reach out to you on occasion, just, hey, how are you doing? How's the home search going? What can we do to help? Has anything changed? Did you change jobs? Have you had to spend some of the money that's in your account? So, make sure that you're staying in open communication with your team. You are the manager of your team. And it's really important. Although everybody will check in with you, you do need to check in with them as well. There may be some fees involved with the pre-approval process, so do check with the lender that you're working with. They may charge a small fee for your credit report. Some folks don't, some folks will. If you're going to a broker, they may have an application fee. So that might be something else that you want to be aware of when you are just getting your pre-approval letter in place. So we'll go to the next slide. So not everybody has down payment. It's a lot of money these days, particularly with the sales prices that are out there. So there are some ways to help mitigate some of the costs that you need in order to close your loan. One of them in the area is the WISH or IDEA, and this is a 4-to-1 matching loan program for down payment and closing costs. It is forgivable if you live in the home for 5 years and for households who are up to 80% of the area median income. And it does count everyone over 18 in the home, the income that they receive. So do work with your counselor, because that's usually one of the first places that you get all of the income screening together for these WISH and IDEA programs. So for example, you put in $1, they put in $4. It's you put in $5,500, they're going to put in $22,000, and it will cap at that $22,000 for the WISH and IDEA. Another one, the lender can, in many cases, cover your closing costs. They do it with non-recurring closing costs up to an identified amount. So talk to your lender if there is a program that does allow for lenders covering your closing costs. Then with CalHFA, there is a My Home Assistance Program. This is a great program. I've used this a lot over the years. It's up to 3.5% of the purchase price or appraised value to assist with down payment or closing costs. Now, if you are looking at any of the MOHCD's homebuyer programs, this particular program does not mesh with it. So not everything matches together. Part of understanding this is making sure your team knows what you need and how to layer these as well. So I guess we'll go to the next slide. A new program that's out, and again, it does not mesh with the MOHCD homebuyer programs, is known as the CalHFA Forgivable Equity Builder Loan. This is huge. It is a deferred payment junior loan for 10% of the sales price for down payment and closing costs. This program must be combined with the CalHFA First Mortgage Loan. The loan of the Forgivable Equity Builder is fully forgiven after 5 years of owning the home, and you need a minimum middle score of 640 in order to get this particular program. The other one that's out there is the Golden State Finance Agency Open Doors Down Payment Assistance Program. This offers up to 7% of the loan amount for down payment and closing costs. And the down payment assistance program funds are forgiven except for 2% of the total DPA on the day of closing. So they have a combination of a loan and a gift up to that 7%. It is available on FHA, VA, and the Freddie Mac conventional loans, units of 1 to 4 in the homes, so nothing over 4 units, minimum credit score of 640, and is available up to 647,200 loan amounts, and it is subject to county lines. The new HUD loan amount limit is now going to be 715, so that particular number may go up. But again, if you need these programs, talk to your lender. They can be combined with some of the other programs that are out there. Just remember, it does not mesh well with the MOHCD homebuyer programs. I guess we'll go to the next slide. So step 3, keep at it and don't get discouraged. it's tough out there. Even right now with this little bit of softening of the market, you're still going to put in multiple offers. So definitely stick with it with your realtor, stick with it with your lender. Make sure that, you know, when you're going in and putting in offers, that everybody is on the same page, that you check what interest rates are. How does it impact your ability to qualify, and keep you in front of everyone else, so that when you're putting in your offers, yours is the one that will get accepted. Now, your realtor will help you write these offers and present it to the seller's agents with that pre-approval letter and something known as the earnest money deposit. What is earnest monies? The earnest monies is a check made out to the title company, and it gets applied to your down payment at the end of the escrow period. And it shows you, the buyer, that you're serious. You've got some skin in the game. You've put some money where your mouth is. You said, I really want to buy that home. Here's $3,000 to put in the earnest monies deposit towards escrow. Let's get this contract rolling. When you have an accepted offer, the realtor will open up escrow. Typical market rate escrow period is anywhere from 30 to 45 days, and a BMR escrow period is definitely 60 days. Now, what is an escrow? And it's an account overseen by a neutral third party. Buyer will deposit money into the escrow account, and the escrow officer will transfer the property when all terms of the contract are met. You do not own that home until the end of the escrow period, even after the offer is accepted. So don't go out and spend all your money that's in your account until you've got that key in your hand. So we'll go to the next slide. Now, there's a lot of different types of properties out there, and they do affect how you are pre-approved, as well as the approval and the type of process that your loan agent will work through with you. So a condominium or a condo, the property is legally divided into physical units. You have 100% ownership of the unit, but typically the HOA will insure the building. You will insure your content of your unit. There's a townhome. This is a style of home, most often legally a condo, but may sometimes be considered an attached single-family home. So you'll share walls. You will own the building. You'll need to insure the whole building of your unit. There's another one called a TIC. This is a form of ownership that allows for unequal and undivided interest. In other words, a fractional ownership interest in an entire building. It's a very specialized type of lending. You do want to talk to your lender about the requirements that a TIC needs. Then there's a single family home. This is a detached dwelling, often with no homeowners association. You own the land, you own the building, and you do need to insure the whole thing. And then lastly, below market rate or BMR ownership. These are price restricted units for income eligible buyers, and the program requirements do apply for each of those units. You want to talk to your lender, make sure they're on the BMR lists. This is where it's really important. Some of them, cities will have lotteries that you need to go through, so make sure that you do understand each kind of type of property as well. We'll go to the next. You can also look at new construction homes. This is a new development, something where no one's occupied that home before. Please make sure you take your realtor to the first visit. The builders do like to make note of which realtors have brought in which buyers. Disclosure packages. Many sellers will prepare information about the home you're about to purchase or put an offer in, including any available inspections if they've had them done. And that's for potential buyers for you to review. You want to be able to make sure that this home is what you want to purchase. HOA dues. If you have a condo or a townhome, you definitely will have an HOA. Some single family homes will have an HOA. And you want to make sure, are these below average? Check the HOA documents. When was the last reserve study done? How well is the building being maintained? There are a lot of questions to take a look at. Make sure that you're very aware of all of the HOA requirements. Lastly, there's the single family home. Buying a detached home doesn't mean you can offer a higher price. You may need to save for all of the things an HOA typically covers. So for example, if you have a condominium and the exterior of the building needs to be painted, well, that's what your HOA dues are going towards, is to the reserve accounts the HOA has in order to paint the building. If you own a single family home, you have to paint that, and it is your expense to cover. So these are upfront things to think about when you look at each individual type of property, as well as some of the individual packages. And also, if there is HOAs, you do want to make sure that you have all of these questions answered. And I think at this point, we return back to, or one more page, or we go to Travis.
All righty, thank you so much, Susanna. So let's talk about MOHCD. We mentioned a couple of times before, but what exactly is that? So it stands for the Mayor's Office of Housing and Community Development, also known as MOHCD. And they support San Franciscans with affordable housing opportunities and essential services to build strong communities. So they offer a variety of first-time homebuyer programs that assist low, middle, and moderate income households to purchase a primary residence in San Francisco. So the programs we're going to talk briefly on are only for San Francisco. And so you may qualify for financial assistance through one or more of MOHCD's affordable housing programs. So what do those look like? Let's move forward. And so when we talk about the first-time homebuyer programs, that's going to include the BMR or below market rate program, as well as other loan assistance programs as well. For the down payment assistant loan program, also known as DAP, you can apply as long as your income is below 175% AMI or area median income. And then for below market rate or BMR ownership opportunities, those are typically between 80 to 130% of AMI. So you may be asking yourself, what in the world is AMI or area median income? Let's find out. So AMI or area median income basically is where the city takes a look at the median income of everyone in San Francisco and updates this chart every single year. So last time they updated it was, I believe, May of this year. And so basically it is derived from the income limits and adjusts depending on your household size. So if you have if it's just you applying for one of the programs and your income is at 77,000, then your AMI is likely at 80%. But if you have a two-person household and your income's a little bit higher, let's say like 88,000, then you would still be at that 80% because it depends on your income of your household members and how many household members there are. So again, this will be something that you'd learn more about if you go through the workshops for these programs. And then your housing counselor would also go through this with you and help you calculate what your AMI is so you'd know which programs you'd be eligible for. So let's go to the next slide. So first-time homebuyer education, it is required for state and city homebuyer assistance. So you can sign up for those workshops by going to homeownershipsf.org for a complete calendar of workshops. And if you're interested in the programs from MOHCD, specifically for purchasing a home in the city, You may also need to take additional education, such as a 2-hour orientation and then 2 hours of a household counseling session. So let's move forward. I just want to make all of you aware of a housing expo that's going to be this Saturday. So it's going to be a resource fair and help center. So information and services for renters, home buyers, and current homeowners will be available there, and individual assistance to address financial hardship. So again, you can sign up on MOHCD's website, and you can hopefully go ahead and be there in person. So let's move forward, and then we're going to open things up for any sort of questions. Please go ahead and take our workshop evaluation. That should be coming to you. So please go ahead and do that. We love getting feedback. And a special thank you to